Hello, and welcome to Virtual Investor Conferences. My name is Cecilia, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from UR Energy. Before I introduce our speaker, a few points to note. Please submit your questions in the question box to the left of the slides. If you're interested in meeting with UR Energy, please click on the Schedule Meetings tab found in the platform navigation bar. You will be able to view the company's availability and submit a meeting request. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I am very pleased to welcome John Cash, Chairman of the Board, CEO, and President of UR Energy Inc., which trades on the New York Stock Exchange under the symbol URG and on the TSX under the symbol URE. Welcome, John.
Thank you, Cecilia, and good morning, everyone from Casper, Wyoming. It's a beautiful day here, and hopefully it's a beautiful day wherever you are. Today I'll be talking about UR Energy and our two flagship properties. We are a uranium in situ mining company with one active mine. So we always like to start off the presentation by showing our Lost Creek property. It is our main flagship property. It's been up and running since 2013. So the photograph on the left there is the processing plant and the drums being loaded on a truck. That is our first shipment of yellow cake that we sent out in late 2013. So we are required, of course, to start off by keeping the attorneys happy by having our disclaimer. I may make some forward-looking statements during the presentation, so please do be aware of that. One other comment on formatting. We submitted the presentation here as a PowerPoint. It was converted to a PDF, so you'll notice that some of the bullets are no longer bullets. They're other symbols, but I think everything else is in good order. So the company at a glance, I've mentioned Lost Creek as our main flagship property. The photograph is of the processing plant in south central Wyoming. It is an in situ uranium operation. Since going into production in 2013, we've produced a lot of uranium, about 3 million pounds of U3O8. And we have allowed production to decline over the last few years because market conditions didn't allow us to sign additional long-term contracts. However, over the last few months, the market has improved dramatically and continues to improve. And we've been able to sign up two very good long-term contracts that incentivized us to ramp production back up. So right now we are in the process of ramping production back up. And this quarter, we expect to be back at commercial flow rates and production at Lost Creek. We have a very good resource in the ground, 11.9 million pounds of measured and indicated, and 6.6 million pounds of inferred. So a very good mine life there of 14 years. That is based on the known resource. And you'll see later that we have a lot of opportunity to continue to explore at Lost Creek, and we believe we have opportunity to grow that resource. Over the years, since 2006, we've had a total of 6 exploration programs at this project. Every program we've done drilling and exploration, we have been able to add pounds to the resource categories. And the exploration cost there for discovery has averaged about 50 cents per pound. So we believe we have a lot more room to grow that resource. Our second flagship property is Shirley Basin. It's also in Wyoming, just south of Casper, Wyoming. It will also be an in situ facility. It has all of the major licenses and permits ready to go. We can start construction immediately. We are waiting to make the decision to start construction until we layer in additional long-term sales contracts that will de-risk the story from a financial perspective and allow us to go immediately into production. So the capacity at Shirley Basin from the mine site itself is 1 million pounds per year. The capacity in the plant, once we build it out, will be 2 million pounds per year should we build out a full facility. So that will essentially double our mine capacity as well as our plant capacity. That'll take us up to a total mill capacity of 4.2 million pounds, which is a very significant number. The resource at Shirley Basin is all in the measured and indicated categories. It's 8.8 million pounds. One of the reasons we acquired this project back in 2013 is because it is completely drilled out. The benefit of that is there's no exploration cost, there is no delineation drilling cost. We can go straight into production without doing any more exploration or other drill work. We can simply drill the production wells and jump right into it. And that helps keep our cost very low. The facility also has a lot of infrastructure already in place. The roads are there already. Power lines and the substation are there. We have two very good buildings in place, a waste disposal cell. So all of that is in place. We just need to build out the processing plant and the well field. And we can believe we can do that very quickly. We are a proven in situ producer at Lost Creek, but interestingly, Shirley Basin also has a long history of in situ mining, and in fact was probably the first in situ uranium mine in the world that started back on a commercial term back in 1963 after the operator discovered that they were having trouble keeping the underground workings open. There was too much water and too much movement of the rock. So they decided to experiment with in situ, and it was very successful. So, stepping away briefly from the projects and talking about the company more broadly, I mentioned contracting. We have recently completed a contract with the Department of Energy. They purchased 100,000 pounds from us at a sales price of $64.47 a pound. That's an exceptional price, especially realizing that the spot market right now is around $53 a pound, and the long-term price is also around 53 as well. So we got a premium for those pounds. The reason we got a premium is because there are so few pounds available that are U.S. produced, and the Department of Energy insisted on buying only U.S. produced pounds. After that sale, we still have 224,000 pounds of inventory that is ready to sell. We hold that at the Converdyne facility in Metropolis, Illinois, so we can convert that into cash probably within 1 to 2 weeks if and when we desire to do that. However, for the time being, we're going to hold that inventory as we ramp up. It's a bit of a buffer for us because we're ramping up to fill into 600,000 pounds of long-term contracts. We have a small delivery remaining this year in 2023 of 180,000 pounds, but that jumps up to 600,000 pounds next year and goes for multiple years thereafter. So we've locked in some very good revenues for the foreseeable future. Those are profitable on an all-in corporate basis, not just mine site, but on a corporate basis. So we're very excited to lock that in. That only represents about 1/4 of our mill capacity that has been licensed. So we still have a lot of blue sky. And as the market continues to improve, our objective here is to layer in additional high-priced sales contracts that recognize the benefit of Western supply versus Eastern supply. So for those of you on the call, you may not be familiar with what an in situ mine looks like and what it is. So this is a photograph of our first mine unit out at Lost Creek. That is an active in situ mine. In situ is a Latin term. It means in the place. So we don't actually move any of the rock. We don't do any blasting, digging, going underground or open pit, none of that. Instead, we install water wells, which are these barrels you see here. Each of them is a wellhead, and we drill down into the ore body. We inject water, oxygen, CO2, and sodium bicarbonate. So essentially a water seltzer, if you will. Those chemicals dissolve the uranium, and we simply pump it up from the adjacent well. So when we're done mining here, we will pull those wellheads out. We will throw down some additional native seed mix. We'll restore the groundwater. When we're done, you won't even know we were ever there. Within a few years, nature will take back over, and it can be returned back to free release, so it can be used for anything. So switching gears for just a bit, talking about the nuclear thesis, why invest in the nuclear space? The U.S. is a significant user of nuclear power and uranium that fuels that. Already about 20% of our nation's electricity comes from nuclear fuel, and a lot of people are surprised by that number. Worldwide, that number is at 10%. Right now, there are 437 reactors operating globally. There are 60 in active construction, and there are 104 reactors on order and 300 proposed. Those numbers do not include the small modular reactors, which I'll get to in just a bit. But the most recent World Nuclear Association, or WNA, a report is projecting that global demand will grow by 4.2% annually through 2040. That is their base case. In their upper case, they're looking at nearly 8% year over year growth through 2040. That report was issued before Russia invaded Ukraine. It's important to recognize that after that invasion, a lot of countries around the world said, hey, we can't rely on Russia for natural gas. What are we going to go to? And nuclear now is part of that story to try to move away from Russian natural gas. Also, a lot of countries said, hey, we have to be more energy independent for our national security, setting aside the whole Russia issue. Just there's a lot of uncertainty in the globe today, and so countries around the world are moving to nuclear because of that. Beyond that, we're seeing increased demand for nuclear power for hydrogen production. Specifically, Duke and Constellation are leading the charge on hydrogen production. They've got active projects underway, and they're being supported by the U.S. government via the Inflation Reduction Act. That is requiring additional uranium to support those programs. And I mentioned SMRs, small modular reactors, a little bit earlier. That is becoming a key to the future growth of nuclear power. There are already several countries that are designing and building out small modulars. They're already in operation in 3 countries. There are projections right now that by 2050, there could be several hundred small modular reactors in operation around the globe. And of course, they will require uranium to consume. Looking globally, and I'm not going to read through this entire slide, but it is a short list of the countries that are moving toward nuclear power. Now, I will call out China because they have a goal to construct 150 reactors in the next 15 years. They have 24 reactors under active construction right now. They continue to say and indicate that they are on target to meet that goal of 150 reactors in the next 15 years. That is a major draw on uranium supply, and explicitly will become a major draw on Kazakh mined uranium. Kazakhstan is the largest uranium mining country in the world. That butts right up against China. And historically, those Kazakh supplies have gone to the Western world, but it looks like going forward, more and more of those pounds will be moving into China via a distribution point on the border between China and Kazakhstan. We're seeing a lot of additional support, growing support in the U.S. for nuclear for several reasons. One of the primary reasons is it's carbon free. And so the Democrats and the environmental leaning sector, they are supporting nuclear power more and more all the time because of its carbon free attributes. Republicans, on the other hand, they support it because of the energy independence that it provides, the energy security that it provides. So we're seeing very strong bipartisan support right now in Congress. Senator Manchin, a Democrat, Senator Barrasso, a Republican, Senator Reich, and others, tremendous support. So growing government support includes a potential cutoff of Russian supply via sanctions. And there are bills being considered right now in both the House and the Senate that would cut off that supply. And I'll talk a little bit more about that in the future. But the Department of Energy and the White House are also strong supporters of nuclear energy here in the U.S. As the interest in nuclear power has grown in the last few years, financial players began to see that. And of course, they want to jump in early into that cycle and maximize the opportunity there. So we saw hedge funds like MMCap and Tribeca formed and jump in buying material. ETFs were formed, and actually our stock trades in some of those ETFs are part of those portfolios. Some of the mining companies began to buy physical pounds because they recognized that the market price was very low and that it was going to go up. But the real game changer is the formation of physical trust, specifically a SPROT, Physical Uranium Trust, that was formed a couple of years ago. They now have over 60 million pounds of inventory that they have purchased. They hold that in a physical form. That is a one-way trust. And what that means is their formation papers, their bylaws, requires them to only be able to buy those pounds and hold it in inventory. They do not have a mechanism to sell that back into the market. After Sprott formed that physical trust, Kazakhstan jumped in and they formed a physical fund as well. Their goal is to raise at least $400 million, perhaps as much as $500 million, to be able to acquire physical pounds of uranium. What we are seeing and what we're hearing from the market right now is because of those physical trusts, the mobile inventory has really been mopped up. There's very little free inventory floating around out there, which has been the case in the past, but that has now gone away, and we're seeing very good, strong market support, a good floor in the spot price because of that. We can't talk about uranium and nuclear without talking about geopolitics because there's so much going on right now globally. Russia's attack on Ukraine, the impact of that can't be overstated because Russia is a major supplier of U.S. uranium. Believe it or not, they continue today to ship uranium into the U.S. in the form of low enriched uranium. But globally, Russia supplies about 43% of enrichment and 38% of conversion capacity. Now, enrichment and conversion, those are just subsequent steps post mining to take the uranium and put it into a usable form so it can be burned in a nuclear reactor. But you can see from those numbers that Russia is a major provider of those services. That's important because the Western world does not have the physical infrastructure or capacity to replace that in the near term should that Russian supply get cut off via sanctions. And those sanctions are being actively discussed in Congress right now. Perhaps more important than that is Kazakhstan. Kazakhstan is the miner of uranium. They provide nearly half of the world's primary supply of uranium. Right now, today, that is not under threat. However, Kazakhstan is fairly dramatically influenced by Russia. And if the supply of uranium gets cut off from Russia, it's not too hard to envision that Russia would tell Kazakhstan, you know what, you're under our sphere of influence. If we can't supply uranium, you're not either. And so that supply could be called into question going forward, depending on what happens geopolitically. Uzbekistan, similar story. They provide about 8% of the world's uranium. They are also heavily influenced by Russia. Similarly to enrichment and conversion, the story in uranium is very similar. If those supplies from Kazakhstan, Uzbekistan get cut off, there is not adequate supply coming from the West to backfill that. From Australia, Africa, the US, Canada, it's simply the capacity is not built out and can't be built out at least for a few years. So there is a potential significant shortage of supply. There is already a shortage of supply post-COVID and post-depressed uranium markets for years. Right now, the shortage in supply is about 20 to 30 million pounds per year, supply versus demand. So those inventories are being eaten away at steadily and have been for the last few years. Taking a look at the U.S., you can see production here has declined to effectively nothing. We are 100% dependent on imports at this time, even though we consume about 50 million pounds of uranium per year here in the U.S. The global demand is about 170 million pounds per year, for context. But that takes us back to UR Energy and our Lost Creek project. We are in the process of ramping it up right now to go back into commercial production to fill those long-term contracts that I was speaking of. Lost Creek has got a really good reputation of very high recovery rates. Typically in the in situ world, the recovery rates are only 60 to 80%. At Lost Creek, we are averaging about 90% recovery after 9 years of production. We have a very low royalty burden, averages about 1% over Lost Creek. That's the area in blue on the map. So that does not have a dramatic impact on our profitability going forward. We also control a very large land position there, about 35,000 acres, as shown in the green and the blue on the map. All of that area can be easily pipelined into our processing plant at Lost Creek. We don't need to build another mill or processing facility there near Lost Creek. Everything can be easily pipelined in. The ground is relatively flat. And as I mentioned earlier, we have a lot of opportunity to expand the resource throughout that mapped area, both in the permitted Lost Creek area, but also in the green. Right now, our focus has been mostly in the HJ geologic horizon, but we know we also have resources within the KM that we've defined and have been described in our technical reports. Beyond that, though, we also have opportunity in other geologic horizons where we know there's mineralization. The L, M, and N sands are all very good prospective targets for us moving forward. The production historically from Lost Creek has been very low cost. We can compete with just about anybody globally outside of Kazakhstan, but any of our Western peers, our publicly traded peers, we can compete. I'll draw your attention to 2015 when we produced nearly 800,000 pounds that year. If you go near the bottom, you can see our average cash cost that year was just over $16 a pound. That year, our all-in mine site was about $33 a pound, and all-in cost, including all corporate overhead, executive salaries, electric bill, taxes, royalties, everything, we were about $45 a pound. Now, we can't get back to these numbers because of inflation, but we believe we'll be relatively close. So if you add $2 or $3 a pound to each of those, we believe that's where we're going to be going forward. But we'll watch inflation and see what happens. But the Lost Creek project has been a very good project. We've had some very good profitable quarters as we've sold into historic contracts, and we believe we can return to that as we begin to fill the long-term contracts that we've signed up. Taking another look at Shirley Basin, the Pathfinder project, very good resource in the ground. It's completely drilled out, good high grade. The production cost there, we believe, will be actually a little bit less than at Lost Creek because of it's all drilled out and because so much of that physical infrastructure is there. Like Lost Creek, the royalty burden at Shirley Basin is very low. It's less than 1%, in fact, well under 1%. So that helps our cost of production as we go forward. And I'm sorry, let me go back to Shirley Basin. The build out at Shirley Basin will take us about 18 to 24 months to build out a satellite and ramp it up. One of the beauties of in situ mining is it can be done very quickly and at low cost. So cost about $30 to $35 million to build out and ramp it up. So that's our focus right now, is ramping up Lost Creek and then attempting to layer in additional sales contracts that would justify further ramp up at Lost Creek and at Shirley Basin. We have an advanced materials purchasing program in place, and that has kept us out of any problems with not having the proper materials, and we are nearly done with hiring staff. We are a leader in the green revolution, and I know a lot of people say that, but my evidence to support that is the production from Lost Creek and Shirley Basin will offset more than 300 million metric tons of CO2 compared to the same energy generated from coal-fired power. We're very proud of that. That's a very large and meaningful number, and so we're going to continue to advance with our in situ mines and take other steps to be more green and have a smaller footprint. We're a leader in research and development. The top 4 bullet items there are past successes. We have announced 2 more R&D programs that will reduce cost and also lessen our environmental footprint. The first of those is a new technology for well casing and installation. We are working on patenting that right now. We've already gone through phase 1 testing, which was very successful. It showed that we could reduce drill rig time by 75% on our injection wells. And we're moving on to phase 2. Even though phase 1 was very successful, we can't declare a victory until we get through phase 2. Phase 2 will focus on injection testing, well development to make sure those wells can take water like we expect them to. We are also working aggressively on water treatment filtration. We have already reduced our water consumption by 24%. Our objective is to reduce it by a further 90% through the utilization of some technology. Taking a look at the market position, we have 264 million shares outstanding, fully diluted, that's 302 million. Our cash position is very strong. We have $73 million in the bank as of the 26th of last month. Or we have a market cap right now of about $246 million, and we trade about 1.5 million shares per day across the TSX and the New York American. We've got fantastic coverage by analysts in the US and Canada as well. So in closing, we are extremely well financed, $73 million. We also have a great inventory of pounds that we can convert into cash. 224,000 pounds. They're valued today at about $53 a pound. And we're working on ramping up Lost Creek. Ultimately, we'd like to get up to a run rate there of about 1 to 1.2 million pounds per year, and then ultimately bring on Shirley as we get more contracts in place. So with that, that concludes the presentation, and we'll take a look at the Q&A and see if I can answer any of your questions here. So a question here with regard to using sodium carbonate or bicarbonate lixiviant versus sulfuric acid lixiviant. So both of those chemicals are used in the mining industry to recover uranium. So in the past, sulfuric acid really has been more limited to Kazakhstan and Australia, and the sodium carbonate or the alkaline lixiviant has been more used here in the U.S. The reason we use alkaline leach here in the U.S. is because it's environmentally easier to restore the groundwater, and also it doesn't liberate as many fine particles as well. It's also safer to handle. The lixiviant, when it's more gentle like that, you bring less thorium into solution as opposed to sulfuric acid, which will bring that thorium and its daughters into solution. So the radiologic risk on the surface is less than when you use sulfuric acid. Having said that, there's no reason why sulfuric acid can't be used. And in certain cases, it may be necessary to use sulfuric acid because it is more aggressive and you can actually get better recovery rates. So another question here about key milestones for 23 and catalyst for growth. So our growth this year, our primary focus right now is on ramping up Lost Creek. That's really what we're putting our manpower to. Beyond that, contracting for Shirley Basin. We've been taking small steps here and there to advance Shirley Basin. For example, right now we're doing detailed engineering on the processing plant, but from the permitting perspective, there's really not much more we can do. Beyond that, we have other exploration projects that we can consider in the Great Divide Basin as well as in the Gas Hills. We have opportunities there. And we're also aggressively looking at M&A opportunities, but we're going to be very disciplined when it comes to M&A. We've always been very disciplined in that front. We don't go out and buy up a bunch of projects simply to say we've got pounds in the ground. We will only acquire projects that we believe we can put into economic production in the foreseeable future. So that's really our objectives here for 2023 and our catalyst for growth. Another question here is, what effect does cold weather have on production? The cold really doesn't get in our business because our pipelines are buried, and so we keep everything below the frost line. We routinely see 20 to 30 degrees below Fahrenheit in the wintertime, high plains elevation here. So that doesn't get in our business. We continue to work right through that. We do have challenges if there's blowing snow. This last winter, put my cards on the table. It was the worst winter we've ever seen here in Wyoming and in the Great Divide Basin. A lot of road closures, some very, very deep snow, and that did get in our business, and it actually slowed down our startup by a few weeks. But hey, spring is here now, and we're working our way through that. But for routine operations, typically the cold does not get into our business. So lead time for a new uranium project, and I'll leave this as the final question. If you're starting from scratch today in Wyoming, you're just picking up claims that has a uranium deposit on it, you're probably looking at a year of baseline data collection. You're probably looking at a minimum of 3 years of regulatory approval, another year to build out, and a year to ramp up. So the absolute quickest you're going to ramp up a new project in Wyoming is going to be about 6 years. If you have regulatory interveners or other regulatory problems, that 6 years will easily turn into 8, 10, 12 years. It's not an easy thing to get into. The entry bar is very high, and a lot of people are not successful in getting into that. So with that, I will turn it back over to OTC, and I thank everybody for listening in, and glad to meet with you